The Vee Trades technical analysis course is now live. Learn to read the chart the right way to prevent costly mistakes. Click the link below to start training now. What's up, traders? This is Vee Trades, and today I'll be doing a technical analysis breakdown for the Spider S&P 500 ETF Trust with the ticker symbol SPY. If you want a chart analysis guaranteed to be done, please read the description below. Also, take a second to give the video a like and subscribe for more chart analysis. I appreciate it very much. This video is for entertainment purposes only, does not constitute any financial advice. I will first go over what I see in the daily chart and finish the video off with the weekly chart. So right here we have the daily chart for the SPY, but I'm going to briefly look over it because I want to go over 2022 and then a possible price targets for 2023. So let's take a look at the daily chart for the SPY. Basically, we had this large move down from December 13th all the way to about December 19th. Nice move down. Now we're just consolidating sideways, so prices are having a hard time dropping lower and also going higher. So that's why we have this little congestion forming right now. Basically, there's a good chance we come back to retest this breakout level at the 390 level and find resistance and then continue lower, since this is a downtrend. So most likely this is the pattern that can occur. If we break above this 390 level with conviction, maybe something like this, and we pull back and find some type of support and we get a bounce, then there's a good chance we take out these highs and maybe even retest this swing right here. So depends on what the market wants to do, but I'm predicting that we're going to find resistance at the 390 level and continue lower back down to this 52-week lows. So that's everything on the daily chart. Let's go over the weekly chart. So I'm gonna spend more time on the weekly chart. So let's go over the 2022. I'll put a vertical line from the start, which is January, obviously, and that's pretty much right at the peak. So it's very easy to identify where the high was. Is right at the beginning of the year. So ever since then, we've been going down. You can see that we made a high point and then a lower low, lower high, lower low, lower high, lower low, lower high. Currently, right now prices are going sideways, so are we going to get another lower low? So that is the pattern that's occurring on the chart, and that means that we're in a downtrend. So most likely we're going to continue lower. So I can put a channel connecting the swings, and that illustrates the movement down more clearer. So here's the downtrend right now, and currently you can see that prices are finding resistance at the resistance side of the channel. So that's where the strong moves are occurring. So this chart tells me that we should go back down to this side of the channel, but it could take a while because this is every bar on this chart represents a week. So it could take about 4 to 6 weeks just to get a decent move down. So as right now, this chart is looking pretty bearish. We're making lower lows, lower highs. EMA is acting as overhead resistance, and basically 2022 was a very volatile and choppy move down. Basically, you can see this move in 2020 was just a crash down, and then we quickly went back up. This one is a very time-consuming downtrend because it's been 1 year and no reversal in sight. Well, the crash in 2020, I believe, was probably the same amount. It was about a 35% drop, and currently we are facing a 20% drop, and the most it did last year was 28. So in 2020 it was a much larger drop, but it happened quicker. Now this is about a year to play out, and we drop not as much, but it's probably better for people to stomach a big drop, because then they're like, okay, that was the worst we're gonna get, and then we just quickly go back up, versus something like this where it drags out and it just taxes your emotions. So you can see that this is a tough market to be in if you are a long-term investor. So this is something that probably going to continue for 2023, because it's not like we're going to put let's say for example this is the price action for 2022. It's not like in 2023 all of a sudden we're just going to reverse course and have a different type of state of market. It is possible for us to find the bottom right here and continue higher, but there's no I think people have an illusion of disconnectivity in the market. Just because it's a new time period doesn't mean we're just going to completely do something different. So basically this is just going to continue in the same fashion we are trading in 2022, and this probably down move right here. And my target I have is a measured move. This is the first leg down, this is the second leg down. As long as we don't go above a 430 level, this target will hold, and it could take, you know, months to play out or even a year. So it's at the 311 level. So I think that's where the market is headed. I'm not saying that's the bottom, but I believe that's where it's headed, because we are going somewhere on this chart. Ever since 2008, we've been in 2009, we've been inside this uptrend right here. Let me go ahead and make it, I'll keep the big uptrend yellow and the smaller one orange. So you see that we've been inside this uptrend right here. This trend line's been holding for, you know, more than a decade, and it looks like since we were overextended, we're coming back to the opposite side of the trend line, which is right at the measured move. So there's some confluence there that, hey, the measured move target's right there, and also the lower side of the channel. If I also look at the monthly chart, you can see it's pretty much right near the high of at January 2020. That was the peak before breaking out of that peak, and now it looks like prices are coming back to retest that level for support. So that's what the price does. It tests levels. If it can't break through it, then it just reverses, goes in a different direction. So it's looking like it's coming back to retest the breakout of 2020, and that's where the measured move target is, and that's where also the bottom side of the range is. So most likely, my prediction is that we can continue the same fashion we are currently seeing right now in the chart. I believe we're going to continue lower until we see the 320 level, 314, 315 level. And then if we see a lot of aggressive buying occur, then, you know, I believe the market participants are considering that a bottom, and they're going to be bidding up the price, because the trend for more than a decade has been up. So it's very hard to reverse, you know, a trend that's been going this long. So we're going to have these, you know, maybe multi-year downtrends, but in the grand scheme of things, it's still an uptrend. So most likely we're going to continue higher. Right now, you know, we're in the middle of the channel, so it's kind of getting choppy, but I believe we're going to see continuation to the downside. If people believe that the S&P is in a bubble, which, you know, it probably is, when you look at the monthly chart, here's a monthly chart for the SPY. If I zoom out, yeah, it does look like a bubble. But the thing about bubbles is that we do see large moves up, and then large moves down, and then a move up you probably never even thought can be possible. So that's how bubbles work. You see, you know, even more acceleration to the upside. So, you know, we could be like right over here, and this could be the down move back over here at the 320 level before we see another massive. So that's what I'm saying could happen. I'm not saying it will happen. I don't know for sure, but it is a possibility, because if we were in a bubble, and I believe everyone considers that we're in a bubble right now, the thing about bubbles is that everyone keeps us saying we popped and we're going to deflate, but the thing about that is the price can go higher much more than you expect it to. So let me see if I see a measure move target in the long term. Yeah, this is right here, and this was pretty much met. That's why we're seeing a two-legged correction. So if we see a big move up, if this is one leg down, or excuse me, one leg up, and we see those two legs down to the 317, 320 level, then the next move up takes the SPY to 725. So that's what I mean, that we can see another extremely large move up, you know, in just a short amount of time. So basically my outlook for 2023 is mostly the same, at least in the first quarter, and even in the second quarter. But again, if we just crash down to the 320 level right away, I mean, then obviously, you know, the target is met, and we're going to be probably retracing back up much quicker. But as right now, 2023 looks like it's going to do the same thing, at least in the first quarter, most likely the second. As soon as we get to that 320 level, I'm expecting a nice move up, maybe at least a temporary bounce. We'll have to analyze if that's the bottom or not, but at least we'll probably get a good bounce from there. And if we continue higher and it looks like a nice strong uptrend, then I'm looking for a very large move higher. So let's just go with that. If anything changes, I'll give you guys an update next week, Sunday. Thank you for stopping by and checking out my video. Make sure to check out the rest of the channel, since you might be surprised at what you can learn. Leave a comment down below on where you think prices are headed. Also, share the video with your friends to learn about the markets. Lastly, I appreciate any feedback to help improve the channel, since I want to deliver great content to you guys. See you next time, and bye.